What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at super micro computer stock, ticker symbol SMCI, on a variety of time frames in anticipation of the next trading day, Wednesday, February 21st. Well, guys, SMCI stock here finished the day down about 15 points a share, 1.96%. Actually, quite the incredible turnaround in the last 4/5 of the day. I watched this happen today. Interestingly, the stock just roughly was down about 13.5% at one point today. So to finish down less than 2%, to me, it was actually a very impressive move to watch. Let's take a look at this one starting on the 1 minute chart. By the way, if you guys get value out of these videos, you'd like to see me cover SMCI here every single day in the near future at least, please let me know in the comment section. That feedback helps out tremendously to know whether you guys are interested in this or not. On top of that, we blew away the 1K subscriber goal by market open this morning. So I've set a new goal that's 2K by market open on this coming Monday. So if you get value out of these videos, please subscribe to the channel and I'll continue to post. Now listen, here on the 1 minute chart, you guys know I'm a scalper at heart, so we have to take a look here to see what kind of opportunity presented itself today, at least briefly to begin, that we can maybe look to replicate if SMCI is yet again in play here tomorrow, Wednesday, to try to generate some revenue, some scalping revenue around a core position, right? Now listen, typically, I'm not one to scalp momentum stocks to the long side when they're red or to the short side when they're green. However, here in the mid to later afternoon, on SMCI, I think the highest quality scalp setups of the entire day were in this kind of region here, where we were seeing these wiggles. Now listen, on SMCI, if you are scalping it intraday rather than only holding that core position, understand that trading this one intraday, the spreads have been a buck or two wide typically, okay? That's the bid-ask spread, right? So be sure that you're paying attention to that, ideally using limit orders, not market orders, right? And you're calculating that in to your risk. So what I mean by that is what we were getting here was actually quite a few, it's a particular setup that I developed over time, and that does have edge when traded on the right stocks. Again, I'm not typically one to scalp to the long side on stocks that are red, but we had some good opportunities here, particularly the breathe and go setup that I developed. If you look here, you see this little pull away, and then you see here this pull into the 9 EMA, a purely psychological, purely self-fulfilling prophecy level, by the way, and then that hard pull upside. You see this hard pull away on, granted, higher volume, a lower volume pullback here. You see that all the way almost down to the 20 EMA or the 9 EMA, depending on how you want to manage your risk, on lower volume, and then a bigger, higher volume pull away. Okay? And, how these are traded are certainly going to depend on how tight you keep your risk, how much, I guess in the case of SMCI, you could say almost dollars per share. Most stocks like this is going to be cents per share. You're looking to gain on the reward side, on the upside. Obviously, on a higher price stock like this, the macro keys most likely have to be adjusted to accommodate that, to widen out the stop, widen out the take profit regions. But listen, quite a bit of opportunity here, at least today, on SMCI that I'm going to be paying attention to again tomorrow. But again, remember, the spreads on this were a bit wider. That is an added risk, but there's ways around, managing that risk as long as you make the proper adjustments. So let's move on now to the 5 minute chart and start getting contextual day to day. Moving on from the intraday mentality here, and we'll look at the volume profile of SMCI on the 5 minute today to tell us, okay, big market sample size, the biggest we can find. Was there an overwhelming sentiment shift one way or the other? Now, looking here, we understand the moves. Okay, we kind of know where they are now. Let's look at the volume profile now. Off the open, that's expected. We have to be contextual. Okay. If this was 3 million off the open, I would consider that to be not so contextual off the open anymore. That would be higher than what would be expected. This is well within range of what I would expect off the open. Okay. We did see an increase, maybe an unnatural increase in volume to the red side here as this down move kind of finished up, got toward that region, maybe an increase of what could be seen as capitulation. Not that I would call that extreme capitulation, tough word to say sometimes, by any means, right? But, you know, we definitely saw a little bit of increase there, okay? So we see this lower volume throughout the day, but what I thought was interesting is we saw actually a rather heavy increase as we headed into this bigger upside move, as the move itself increased in aggressiveness to the upside, trying to reach $800 a share. We did see somewhat of an unnatural increase in volume there. Okay, so I would call this, as far as contextually speaking around the move to the downside today, and all of this considered, I would consider this, you know, the bears might look at this and say, well, we clearly won today. Bulls just understand that. But me, when you start including the recovery that we saw and then this increase in volume into that acceleration upside toward what would have been $800 a share had we tested that, and especially this coming after, right? This is the more recent data. To me, I have to call this a neutral volume profile on the 5-minute chart. Okay, let's move on now to the 30-minute. This is where things get really, really, I would say, in play from a day-to-day perspective, because these are levels that I need to keep an eye on, right? We have that 50 period right around 816.50, that 200 period right around 837.75 approximately, 837.50, right, ish. And we look here, here's my primary objective goal as a bull. I mean, this is a volatile name. So yes, the 50 period's 6% away, the 200 period's just under 9% away. But listen, my number one goal as a bull on SMCI would be to reclaim both of those levels ideally, which would put the stock up testing $850 a share. I mean, that's my goal, even from a day-to-day perspective on SMCI. That is really the goal for bulls, at least when it comes to the 30-minute chart. Now, bears, here's what you're looking for. See how this 50 period's curling downside? Here's what you would want to see. You want to see this thing continue downside at a more aggressive rate, get beneath $800 a share, and continue to give a psychological reason for the stock to fade, at least given the 30-minute chart. Again, one factor of many. Okay, let's move on to the 4-hour. You can see here that this one's very important right now. This is the 50 period, right about 780. Okay, within that range. The stock is, what, 10 points off of that 50 period here on the 4-hour chart. It's not that much to ask for, you know, from a bullish perspective to want to see that reclaim. That's obviously my goal here, looking, you know, specifically at the 4-hour chart. And if I'm a bear, it's really simple here. Just fade as hard as possible off of the 50 period. I know, you know, bears and bulls, you have to understand that I think most bears are looking at this, if they're positioned short, and they're saying, I'm looking down toward $500 a share. And the reality is, bulls, you're looking at this and you're saying, I'm looking for $1,000, $1,200 a share. Right? I mean, the range on this is massive, so you can't really apply the logic of another stock's movement potential to a stock like SMCI. Right? I mean, the downside target, a lot of bears, is going to be $500 or lower. The upside target for a lot of bulls is going to be $1,000, $1,100, $1,200 or higher. Okay, just understand that this is a different trade than most. And that being the case, it requires risk to be managed a little bit differently. Be careful here. Okay, so let's take a look now at the daily chart. This is arguably going to be the most important chart. I think this one really puts things into perspective the most, because it forces us to move away from the self-fulfilling prophecy indicators and look at what is just the most obvious story here. And the most obvious story here becomes the psychological price levels, the round $100 regions. The most relevant right now, of course, $800 a share. All right, if I'm a bull, I want to see 800 hold. Right, hold 800, give it some strength, make a strong bounce to get us up toward 1,000. And if I'm a bear, priority number one, 800 is the enemy. Right, fade hard off 8, head down towards 7, get down through 7 is what the bears ideally in the very short term would be looking for here. Now, for those of you trading options, implied volatility is elevated. That presents a slightly elevated risk of IV crush. Okay. Just know that if this starts coming back down toward equilibrium, meaning the options traders start to price in less volatility into the pricing of the options, that does suck some value out of both purchased calls and, well, really calls and puts. But if you're purchased, if you bought them, that's going to directly negatively affect your position if this starts to come down. If you sold to open those contracts, that's a benefit, right? So that is just an added risk. It's not the end of the world, but just understand if you see IV fall, you know, that's something you're going to have to outrun via delta, okay? Speaking of options, let's take a look now at the bias here in the chain. We have 394,000 total contracts traded today. That's another pretty good sample size here today. 188,000 of those were calls. 205,000 of those were puts. So we are seeing, you know, just a slightly bearish bias. However, given the context of SMCI, you know, you could almost argue that this is relatively undecided because it's not extreme one way or the other, but it is slightly a bearish bias here, a put side bias. The short-term speculators, the 0 to 20 delta, 82,000 calls versus 122,000 puts. So we are seeing a short-term bearish bias here in the chain from today. And while the volume is lower the deeper you go, or the higher you go in terms of delta range, understand that does start to shift toward equal from 21 to 40. And then you go to at the money, in the money, and deep in the money. And when you go from at the money, in the money, and deep in the money, that starts to shift to the bullish side, which is the more mid to longer term outlook. Okay, as always, understand the options traders can be wrong. Number one around here, make sure you manage your risk. Listen, if you guys want to learn a lot more about scalping, take a look at that first link in the pinned comment. I send out my personal scalp setups every single day, the setups as I'm watching them in real time. Swing trade setup alerts, unusual options activity. The UOA goes out many times a day, every single day. And Platinum one-on-one, I think, is a great option for you if you're looking to really try to expedite things. It's more one-on-one, hands-on coaching with me directly. Appreciate you guys. Again, if you got value out of this video, please subscribe to the channel. Let's hit 2K by Monday open. I think we can do it. I'll see you in the next one.